co-founder and director of Enryo, and with Link, we are really, really delighted to bring this wonderful panel of speakers to you this morning to talk about what is a very important topic and is certainly very current at the moment. People are just rolling in, so I'm just going to start with some housekeeping rules. I'm sure everybody is very familiar with Zoom over the past few years. This is Zoom webinar, which means that as panelists, we are the only voices and the only images that you'll be seeing over the next 2 hours. But you do have a voice. If you have any questions for our panelists, there's a Q&A function, and I encourage you to send through as many questions as you like. We have loads and loads of time for them, and we'll try and get as many of them to our panel as possible. Speaking of the panel, I'm now going to go around each panelist and ask them to just briefly introduce themselves before we get going. John, can I ask you to do so first?
Brilliant, thank you, David. So I'm John Howells. I'm the Chief Executive of Link, which is the largest ATM network in the UK. Just about every ATM is connected to Link, and more importantly, about 80% of the cash that we use comes out of Link machines. So we've got some really good insight into how the way we're paying is changing in the UK. Interesting and I think a little bit worrying as we go through it. And we've also got some research about how you've got much the same going on in Europe. Back to you, David.
Thanks very much, John. Ruth.
Yes, good morning, everyone. Ruth Wandhofer. I spent most of my career in payments, to be precise, since 2003. Started in Brussels, negotiating PSD1, creating the SEPA scheme rulebooks, then 11.5 years at Citigroup, and I'm today the chair of the Payment Systems Regulator panel in the UK, and also working both with the fintech and financial industry generally around payments, innovation, and everything that comes with it, and delighted to be here to share my thoughts with you this morning.
Thank you very much, Ruth. Natasha.
Thank you. Good morning. Natasha Teran. I sit on the Financial Services Consumer Panel and the Payment Systems Regulator Panel along with Ruth. I have a background in banking, journalism and payments, most recently at Swift, where I had a sort of bird's eye view across the world where payments are concerned. Thank you.
Thanks very much, Natasha. And Sarah.
Thank you, delighted to be here. I'm an independent digital consultant and started up at .com in Silicon Valley in '94 and have since worked in various vertical sectors, particularly in the financial services sector and in identity, particularly in identity inclusion. And I'm delighted to be here today to take part in this discussion. Thank you.
Thank you very much. Someone just commented my voice is very quiet, so I'm going to shout. So hopefully that comes through a bit better. A great panel, and as you can probably gather, we're talking about the full range of payments here. We're going from cash to digital, and then a bit further into digital, what digital inclusion means with digital identity and the potential for central bank digital currency. Before we hand over to John to provide the first presentation, I'd like to run some polls with the audience. So there should be some polls on the audience screen there. If you could have a vote and let us know what you think of these. Do you think the UK is close to achieving a digitally inclusive society? Do you think that a central bank digital currency will be a positive development towards achieving digital inclusion? And finally, when, if ever, do you think the UK will be fully cashless? Have a little look at those questions and vote away. I'll leave it open for another 30-40 seconds or so, so we can see what you think. There is no wrong answers here, and we will not be holding anyone to account on how they voted, so please vote freely. And of course, we will also be seeing what our panelists think of these questions as well. So final few votes, if we can get those in, I'm going to close it in 5, 4, 3, 2, closed. Okay, so let's share those results. Do you think the UK is close to achieving a digitally inclusive society within the next 5 years? 18% think yes, 65% say no, and 16% are on the fence. What about a CBDC being a positive development towards achieving digital inclusion? This is a tough one. A third of you saying yes, a bit more saying no, and about a third saying don't know. That makes sense, quite a new area. When, if ever, do you think the UK will be a fully cashless society? Only 1% next 5 years, 29% next 10 years, but the majority think it's going to be within the next 20 years, so by the time we get to 2042, 10% next 30, and about a quarter think never, the UK will never be a fully cashless society. Well, that set the scene nicely. Hopefully that's got everyone's interest sparked on this Wednesday morning. And now I'm going to hand over to John Howells for the first presentation, and I will share your slides right now, John.
Brilliant. Thank you, David. So I think I've got 6 slides here to explain what Link thinks is happening with cash. I think I agree with the poll that we're probably never going to be a cashless society, but our concern is we're moving rapidly to being a very low cash society. And I think that means that cash starts to struggle as being an inclusive payment method, unbelievable though it may seem. What I've got here is a picture which struck me from Natalie Sini's excellent access to cash review. So I think this is about three and a half years old, and it was worthy at the time in being right up there in bold, a pub going cashless in the UK. I have to say nowadays, I think you're more likely to get a story about a pub committing to keep cash. There has been a huge change in cash usage in the UK over the last few years. I'll have some data on that later. But what we have got is a big move in the UK to move from cash to digital. That means we are heading over the next 5 to 10 years to being a very low cash society. And as I talk through the implications, I think that what that means is that cash as a payment method is going to start to struggle. And I actually think it's going to be acceptance. It's going to be where you spend it that is going to be the problem, which is going to emerge first. And that is a problem because the UK is not ready to go cashless yet. If you look at the consumers who rely on cash, they're very heavily concentrated in the more vulnerable. So we have got problems if we start to move cash out and see it disappearing as a way of making payments. 80% of consumers in the UK like to use cash. So never mind people who rely on it. There's a huge number of us who like to use it and would be hugely inconvenienced if it disappeared. Therefore, I think we need to make some really strong steps in the country to protect cash and make sure we hold it together. And I can talk about what Link is doing, and I can talk about what's going on in some other European countries. But our view is that that is only going to work for 5 or 10 years. And as cash starts to disappear as a fully inclusive payment method, we need to look at the alternatives, and that means digital. And I have to say, we are not at all convinced that we're on a good track to having a fully inclusive digital system. We can talk about, again, some of the things we're seeing in Link, which are giving us concern. And then we've got some excellent panelists to explain what we can do to speed it up so that as cash and the infrastructure that supports it starts to come down, we've got an inclusive digital system and don't end up leaving people behind. David, can I go to my next slide, please? Right, now what we've got here is what's going on over the UK ATM network. And there is a really strong correlation between the use of cash for payments and the use of ATMs to get cash out. When I started at Link about 10 years ago, cash was used for 6 out of 10 payments. As we went into the pandemic, I think it was around 3 out of 10. I think as we come out of the pandemic, we're down at 1 out of 10. So you've got quite a pacey reduction, and that is shown in these graphs. What you're looking at here across the very, very top, you've got January to December in the year before the pandemic, and that's a very classic ATM pattern, which is repeated year after year. You've got those monthly up and downs as people use more cash at the beginning of the month, and then it disappears off towards the end. You've got that big increase throughout the year, and then the drop off in December. And then as you drop down to the next line, that's the year of the pandemic, and you can see as we went into lockdown in March and April, a really dramatic drop off in ATM usage. That's about think it was about 60% of its peak. As you go to the one below that, you can see that it never came back again, with a fairly feeble recovery as you go through January, February, March last year when we were in lockdown. It never really came back again. We've got a pretty much permanent reduction, we think, of 35%. And then you've heard some good news stories at the beginning of this year. That's that little red bit at the beginning. But as you can see, it's not really that exciting. It's against full lockdown last year, and January is always low. And we are expecting, and we think you'll see it next week, that downward spike that you get at the end of the month to appear. And that red line is going to kind of track along what happened last year. And then we're back to that 10% decline year on year in cash usage, which we've had since 2010, which was when cash usage as a payment method peaked. Just for interest, checks peaked, I think it was 1990, so cash is about 20 years behind checks. But if it follows the same pattern, and the graphs look very similar when you look at the long-term 30-year graphs, you could easily see a situation where we've got cash usage for payments down at the 1 or 2 percentage points, which is what checks is today. And if you look at the cash infrastructure in the UK, there is no central brain or regulator which is deciding where infrastructure goes or holding it all together. You've got an infrastructure which is about £5 billion a year, provided by 30 or 40 competing companies. That's everything from ATMs to armoured vans to bulk cash centres. So lots of big, ugly, heavy fixed costs. And what is going to happen as those volumes drop off is that competitors, unless something is done, are going to start withdrawing, and you end up with problems with that cash infrastructure. And that's the risk which we have with cash. As volumes come down, if nothing is done, you end up with cash infrastructure beginning to disappear. That means that consumers can't get hold of cash. It means that retailers start to find it too expensive to handle cash and go get it in and out of wherever they're getting it. And you end up with acceptance and usage beginning to disappear. So we need to do something in over the next few years to make sure that cash continues to be accepted and viable. That is Link's role in the UK. David, if I can have the next slide, let me talk about some of the things which Link is doing, which I think will work really well over the next 5 years, but which will struggle as we go forward. I've picked on a couple of things here. First of all, the ATM program, which we run to subsidise ATMs, so that as volumes drop off, they don't disappear across the country and start to give problems with consumers getting access to cash. We subsidise about 3,400 ATMs at the moment. It was probably 2,000 as we went into the pandemic. I think it'll be 5,000 to 10,000 in a few years' time. And that 15 million, it comes from the large retail banks who want to maintain cash access. They've got an obligation, at least morally, to do that. So they support Link very strongly to make sure we keep a good network of free ATMs across the country. And those little blobs you can see, we've got 2 types of subsidy we run. One is in rural and remote areas, and those are the blue blobs. And across the country, anywhere where we've got a lack of ATMs within a kilometre of a population centre, we will actually pay an operator to put an ATM in there. And then the red ones are the second programme we run, which is the more deprived areas, typically in the donuts around major city centres. You can see around London, around South Wales, etc. We've got several hundred ATMs across the country. Again, I think that will grow over the coming years. And what that does is it means that access to ATMs and to cash for consumers is maintained. We're doing a couple of other things for that. Another one you might have read about last year was the launch of an access to cash withdrawals without needing to buy something from retailers' tills. This is a really useful way for getting access to cash into quiet villages, small high streets where there's not enough footfall to justify an ATM, but where retailers' tills are already with all the point of sale stuff that you would want there, a really good source for local communities who need access to cash for free. You can see that was launched in October. It's growing pretty quickly as people who supply to retailers put those tills in, and I'm expecting that to continue to grow at that very fast rate for the next couple of years and provide a really useful stopgap across the UK for communities who start to lose ATMs and branches, where there's not enough footfall to justify a subsidised ATM or branch, and where this kind of channel is really useful. And then the final one, not on the slide, but which you'll have read about in the newspapers over Christmas, is the banks and Link and other suppliers, particularly the post office, have made an arrangement where when the last branch in town closes, Link will now work with those suppliers and put back in a shared branch. And you've probably heard about the very successful pilots with a shared post office banking hub in Cumberslang in Scotland, in Rochford in the south of England. And we're expecting that that will also provide a really useful stopgap for the next few years, where communities lose their last branch in town and where they need to have face-to-face banking facilities put in. So I think a really strong story about what countries like the UK can do to protect cash for the short term. But going back to that first picture, the problem is that the acceptance is going to start dropping off. Now we could, and I'll show you in a minute some things going on in Europe, we could look at legislating to force shops to accept cash. But I really struggle to think about that happening in the UK. You know, the concept of people going around to shops and saying, no, you can't, you've got to accept cash here, I think is distinctly un-UK in nature. So I think acceptance is the big risk. David, next slide, please. Some data from Europe. It is a myth to say that Europe, particularly places like Sweden, have gone cashless. The Swedish people use cash. Typically, a third of the people use cash every fortnight. That is a pretty regular usage for things they find important. When I last spoke to the Riksbank, which was with Natalie Sini just before the pandemic started, what the Riksbank said was, "We're glad you're looking, UK, at access to cash now. We went too quickly into it. We've lost too much infrastructure. It's impossible to put that infrastructure back easily when you've lost it. And we've got too many people in Sweden who are not ready to go cashless." So Sweden has passed laws over the last couple of years to require the provision of infrastructure. They've actually gone for access to cash within a 25 kilometre distance from a community. That's an extraordinarily long distance if you compare it to the UK, where Link is currently working to 1 kilometre, but that's what Sweden has gone to because they've lost so much infrastructure. And if you look at the other countries that we've surveyed in the last couple of months, you can see that cash usage right across Europe, though you've got lots and lots of people who are heavy digital users, you've also got enormous numbers who are regular users of cash. And it's the same in the UK, even the UK, which is moving rapidly to digital. You've got half of consumers who like to use cash on a fortnightly basis. And some of that will be because of preference. Some of it will be because of necessity, giving money to carers to go shopping, etc. So we are not ready to go cashless in the UK, nor in Europe. And whilst I think it is easy to see how we can hold it together for 5 years or so, I think it is a problem which is approaching fast. If you look at what some other countries are doing, Holland has got a ATM utility set up between the 3 largest banks. If you go to Holland, you'll see those yellow ATMs from that utility around the country. And I think the UK may well move into that kind of approach as well. Sweden and Spain have made moves to make cash acceptance mandatory in shops. I struggle to see that happening and working in the UK. I struggle seeing it working in Sweden and Spain, but I think it's good evidence that acceptance is an area of risk. But our overall sense at Link is that we are on track to a low cash economy. We can hold it together for 5 to 10 years, but problems are coming. So is digital going to be ready to pick that up? Next slide, please, David. Again, some data from our recent survey work. I think the picture is mixed. We've got typically 3 in 10 consumers across all those countries from the previous slide who say, yeah, no problem, bring it on. We like using digital. We're virtually digital now and don't use cash. But for every 3 in 10 that says they're happy to move to cashless, we've got 3 in 10 who say completely the opposite, that they're not open to moving off cash to digital. 50% of consumers in those Eurozone countries are not able and have never made a mobile payment, an extraordinarily high number. And you've got 20% who are saying they do not trust digital. Fraud is typically the problem that they're raising at the moment. But there is a massive barrier if we're going to get large chunks of the community, and we're talking 90-95%, it's going to be truly inclusive using digital. We've got a massive hurdle to overcome, and that's what Natasha, Sarah, Ruth are going to talk about in a moment. And my final slide, please, David. And Link does think that the two topics for today, digital currency and digital identity, are going to be very significant opportunities for this, which is what they're being talked about later. On digital currency, goodness me, there's so many different views about how it could be implemented. But I think Link's view is that you've got such momentum building now across the world that there is going to be a move to digital currency, maybe central bank digital currency, but it is looking to us like an unstoppable force. And given that the regulators, again, in the UK and across Europe and the world, are getting a very good grip on how to manage that, we think that inclusivity will be a very important part of digital currency as it's implemented. And because digital currency is really just a rebuild of the payment systems, it's the currency and it's the wallets critically that it goes into. We have got a massive opportunity to create an inclusive digital payment system as digital currency and CBDC is rolled out. And I think similarly on digital identity, which Sarah is talking about, has been clear for the last 2 years that this is a deeply political and controversial area. You can see in things like vaccine passports that this is not going to be an easy thing. But the bottom line is we need to crack digital identity if we're going to have inclusive digital payments. And so that's my message. We've got 5 years, maybe a little more, to work out what the answer is, but the infrastructure is going to start to crumble, and we need to work out how to get a fully digital approach to payments, or we're going to have a lot of people left behind in the UK and across Europe and the rest of the world. David, back to you.
Thank you very much, John, and thank you for your presentation. Let me stop sharing. There we go. I should be back here. Wonderful. Thank you very much. I've got a couple of questions for you before we move on to Ruth's presentation. You mentioned the access to cash review and some of the recommendations that have come through that to improve access, such as cashback without purchase and banking, shared banking hubs. What do you think the high street is going to look like in, say, like 10 years time? Do you think it's going to be dominated by ATMs, or will there be a mix of withdrawal and deposit facilities?
Our view at Link, and I can see Natalie in the chat, so I'm not talking for Natalie, but my view is that we are moving to a low cash society. In 10 years time, just as if I tried to go and pay for my shopping with a check, I'd be met with raised eyebrows and probably sent to the kiosk at the back of the store and made to wait for 10 minutes. I think that unfortunately that is where we are going over a 10-year period with cash infrastructure. So I'm not expecting to see the high street with large numbers of branches and ATMs in 10 years' time. I think we will have moved away from that. I think it is unrealistic to expect banks, let alone taxpayers, to pay for the provision of that kind of infrastructure. And it's very easy to not see that coming. But if you look at the pace which it's going in, the simple maths is that in 10 years' time, cash usage will be below, well below 3% of payment volumes unless something changes. And that is not going to justify infrastructure in our high streets costing millions of pounds. It will have disappeared.
Question that's coming from Dave Birch there, just an interesting one. Analog TV was turned off. What about setting a date for turning off cash, say in 2032? Do you think that's appropriate?
We love the idea of a national, this is a national problem which needs to be inclusive for all consumers. We very much like the idea of a program such as the switch over from analog to digital. I think if you go back a bit further in time, I'd also do the switch from old pounds, shillings and pence to the currency we've got today. Those were national programs to make sure no one was left behind. I'm sure Ruth will talk about it, but I think that kind of thing is an excellent idea. I know that I've heard a number of people, including Natalie Sini, recommend that, and I definitely support that.
Very interesting. It certainly seems that the solution has to be driven by a cohesive plan that involves all of the actors and institutions involved. How do you think that can be achieved? Do you think it's got digital identity, digital payment, digital inclusion needs to be more of a national priority?
The Link's view is it needs to be a national top-down programme. I don't think you can get to that in one step. I think there needs to be a good, thorough and quick discussion about how we're going to move to digital inclusion. I think the work that's going on, for example, in the PSR panel is beginning to look at that. So I think that's excellent. I'd argue that an access to digital payments review, not dissimilar to the access to cash review, would be a useful first step. But whatever it is, we need to get our heads around how do we move to full digital inclusion over the next 5 years, because as cash begins to disappear in the country, we need to make sure we haven't got large chunks of our most vulnerable sitting and not able to use the payment system which everyone else is. And it's a no-brainer, but we need to move faster on the digital side. I think there's been some really good work in the last year to secure cash access for many years to come, but many years, not 30 years, many years, 5, maybe 10 at a pinch, and digital inclusion is not getting enough focus.
It's certainly, having been involved with cash for some years before the access to cash review, that certainly got it on the front foot and got it in people's minds, particular policymakers, and resulted in some policy action. And as a cash and graph nerd, I got unashamedly very excited by the red line being so high in 2022 so far, John, for ATM withdrawals. But we'll see how that one goes over the next 9 months, shall we?
It is a fatal mistake, really bad policy making and regulation if we assume it's going to go back to pre-COVID. That would be a shocking disregard of the need to focus on digital inclusion now. If we wait for 5 years, there'll be many, many people who will suffer in the UK quite unnecessarily.
John, thank you very much indeed. We will come back to a Q&A at the end of the session. So if you have questions for John in particular, send them through. If you send them through the Q&A function rather than the chat, it means we can line them up in a bit more of an orderly fashion. Ruth, I'm going to come to you next. I'm going to share your slides and hand over to you. Just a moment. Is that working?
Yeah, thank you, David. I think move a few slides back.
Oh, sorry.
Here we go. Perfect. Yeah, that one's just the starter. So thank you for having me today. So let's quickly go into the overview of my presentation on the next slide. Building on John's incredibly tangible opening here with the challenges that we're actually facing, I want to talk a little bit more detail around the challenges and also the outcomes that we are looking to achieve. Some of the elements that are significant projects in flight or on the horizon, and also be more specific around the barriers and how to overcome these when we think about digital payment inclusion. And I'd like to echo one of the comments in the chat specifically, which is all about the overlap between financial and digital inclusion, or exclusion for that matter, and the need for a holistic approach, because we are indeed looking at a number of factors that are leading to the outcome of people being digitally excluded, that are leading to the answers that we've discovered in this research. For example, many people not being comfortable to embrace digital instruments in the first place, which has a number of root causes that can be linked to the unavailability, the unaffordability, or the lack of digital skill sets that are present in many people in this country. And we need to work on all of those in a way in parallel. So let's start with the sort of challenge on the next slide. How do we get to digital inclusion? Just as a brief recap as well, talking about these overlaps of factors, we have more than 1 million people still in this country without bank accounts. We have more than 1 million without internet access, and we actually have potentially more than 2 million with affordability challenges to pay for internet access. And of course, Phil Kenworthy nicely mentioned in the chat, we have regional storms in Scotland, which means that even if you wanted to pay for internet access, you couldn't do it. So the infrastructure itself is something that we have to keep in mind when we think about moving all of the population into digital payment means, as cash becomes a challenge practically and from a cost perspective. And we therefore need to look at it at a government-wide level holistically, because things will have to be put in place to give everybody that opportunity. Next slide, David, please. So let's think a little bit more about the challenges on the road. We've looked at the numbers in terms of decline in cash. Therefore, our objective as a country really should be to get more people into digital payments, and preferably all people. And that is, of course, linked to some of those challenges that I mentioned, ranging from affordability to availability to the ability to actually engage with those instruments. And we're not even talking about one particular instrument, we're talking about a plethora of instruments that are often not very well understood. So there's also, for those people that are digitally skilled, still a barrier around actually understanding in detail how instruments work and how they're protected. For those people that are already engaging with digital payment instruments, often people might just use a debit card in the coffee shop down the road or at Tesco's. So how do we actually get them to understand that there are other alternative digital payment instruments and services available? Calling out, of course, open banking as one of the big initiatives that has been rolling out for several years now. I think we're still in the early stages of having the majority of citizens in this country being aware that you can use open banking in different use cases. And certainly there's still barriers in terms of point of sale at the merchant using account-to-account payment variants, as opposed to just relying on the card systems. Another consideration is, of course, the awareness. What are the benefits, advantages, and disadvantages of moving into digital payments, and also within that ecosystem, choosing different solutions, being able to switch across solutions, and understanding also, if you're staying within the cash ecosystem, what implication may that have? And we all know about the poverty premium, the fact that you have a significantly higher output in terms of the costs that you incur, for example, in the utility context. Now, in order to be truly inclusive, we are in a network industry. It takes two to tango. We really need the user to be happy, and we need the acceptor of a payment, for example, the merchant, to be happy with receiving that payment instrument. And therefore, as it becomes more difficult, for example, to deposit cash as a merchant, as it is difficult to make choices in terms of digital payments instrument available, the merchants have a set of challenges, but so do the users. And we need both of them to really coincide to actually have a happy outcome that really makes a difference in terms of the efficiency and also the inclusiveness of everybody. Next slide, please. So we need to be bolder. On the coming slide, I will just call out a few things that are in flight or are progressing as initiatives that could address these challenges. But as with everything, it can't be just the payments world addressing a challenge. It has to be the payments world together with the rest of the country as it comes to infrastructure, as it comes to affordability, inclusion, software, hardware, and education. Everybody has to work together. So the first one is, of course, open banking, which enables users to make payments from their accounts directly to another person or party. And when it comes, for example, to the merchant side, of course, they would love to have a real-time payment that they can receive and reconcile automatically, as opposed to waiting for 3-4 days of settlement cycles in cards, or as opposed to accepting cash. That can be a challenge in terms of the cash deposit and also the reconciliation and accounting. Direct debits have been around for a while. Maybe we need to think about modernizing parts of that. I will get to that in a second step. And we have now the emergence of variable recurring payments that really could give a lot more control to individuals that today struggle with direct debits in terms of, having more volatile income scenarios, and therefore being able to pay in portions at their ability and request a payments in that sense. The role of third-party providers in the open banking ecosystem is very important to understand, first of all, but also to see how this can be sort of continue to be expanded in terms of having a real account-to-account based ecosystem that works in all kinds of scenarios, as opposed to just me sitting on my laptop and making an online payment to HMRC to pay my tax, as an example, which is one of the government departments has actually accepted open banking and embraced it in terms of payment initiation. If we think about app scams, and John called out, for example, the challenge we see with digital payment fraud, we have seen increasing fraud in that sense. We have seen social engineering and people being manipulated into changing some beneficiary details. In an open banking setup, you would have a third-party provider in the middle that would have some ability to control and to even help a user not to alter an instruction for the benefit of actually ending up in a fraudulent beneficiary account. So there are some benefits that we're starting to see as this ecosystem becomes broader and more inclusive. And I think we need to work on making this more viable for more people of the population and also more use cases than what we have today. Now, John ended with digital identity. This is clearly the red herring in the room. Everybody talks about digital identity. It means very different things to very different people. My personal view is that we need to make sure that digital identity doesn't end up in a centralized control outcome. Digital identity should give sufficient levels of privacy, but also the ability to do things more efficiently in the digital economy, whether that is buying things online or making sure that you can cross borders. So digital identity can have very broad implications. And I think there are certainly firms out there that are starting to think about leveraging the open banking API economy to build a digital identity layer with a role of bank assurance in it that can certainly significantly help to cut fraud in e-commerce, which is one of the big challenges for merchants and for everybody, because of course costs tend to be passed on even though people don't really see it. Central bank digital currencies is certainly further down the line. I just came from a breakfast on CBDC, and this afternoon we'll continue conversations with the Bank of England, but I think in that sense it starts to crystallize further and further that we might actually want to look at more private sector innovations in terms of programmable money that can bring the value to the individual, to the merchant, to the business and government, because no one is really anticipating large amounts of money to become public money, because no one's done the calculation in terms of what that means for the central bank balance sheet, for a country's GDP and everything else. So I think we need to be quite careful when we talk about central bank digital currency, because it might mean different things to different people. So let's look in the next section on the barriers. And there I would like to particularly hone in on the consumer and the merchant. Next slide, please. First of all, what impact everybody is the classical inertia. And I remember those conversations from 10, 15 years ago when we were working on designing the single euro payments area, and every country came with their habits and their instruments and said, our direct debit is the best, our credit transfer is the best. How do you create a consensus on a pan-European approach that is harmonized? People didn't want to change, and it took a long time, and it took regulatory pressure and all sorts of economic pressures to actually get to a consensus to change. So changing from a payment instrument that is so embedded, such as cash, can be a challenge for many people. Obviously, budgeting and other things that I'm going to get into in more detail are a key factor in this. But it's very, very hard to change, particularly when you see other payment instruments, but you're not sure whether they are for free, because they might not be. You don't know what the repercussions are if things go wrong. So there are a number of challenges in terms of that change piece. Lack of control really comes out as one of the key factors of many individuals using cash. They needed to budget. I think there's an element of physicality that is really important in cash. And I think it will be quite hard to extrapolate that a central bank digital currency that's easy to use and for free might have the same outcome of helping to budget individuals, because it is lacking the tangibility. Certainly digital payments are efficient, particularly when we think about the receiving side. It is much more efficient to receive a real-time payment that automatically reconciliates with your ledger and your budgeting than having to accept cash, put it into the bank and also then look into your accounts and see what you got. Equally, sometimes the card situation can also be a problem because it takes time to settle, and therefore the speed and efficiency of alternative digital payments, whether that be open banking or CBDCs down the line, or privately re-engineered digital money, because we already have digital money, is of course the second sort of step to look at. The third one, fear of change, safety and convenience. It is so hard, back to the inertia, to then convince somebody to adopt a new payment instrument that is seemingly foreign to them, that might require a level of digital skill set that will take time to develop. It will also be really important that individuals understand what are their consumer protections under these new instruments. Some instruments protect for purchase, which is not really a payment transaction protection. Others protect for payment transactions. And again, others have no protection whatsoever. If we think about stable coins issued by businesses in jurisdictions that are outside regulatory perimeter. So understanding what it means and how it impacts you when you change is a challenge. And of course, coming back to the digital fraud, there are areas where only as you start adopting new digital payment instruments, you see what challenges could arise, and then you have to work on overcoming them. But there is a risk factor that individuals in particular that change into those feel they get burned and they change out of them, and then they may not come back. So I think that is something we really have to keep in mind as we think about fear of change. Next slide, David, please. Now, for the consumer in particular, and this is certainly something that the PSR has started to address with the consultation last year, there is clear lack of understanding on how an individual is being protected from a consumer protection perspective across different digital payment instruments. Most people are starting to understand credit cards in terms of the protection offered there, but this is a purchase protection. This is a much bigger piece than just a protection around the transaction, around the execution of the transaction, which would be something that has been defined fairly clearly in the Payment Services Directives 1 and 2. So giving that level of transparency and understanding across different instruments is a first sort of barrier to overcome. And the big question there is, should the protection be the same across all digital instruments? But again, if you have to differentiate between purchase protection and payment transaction protection, you're still in a complex environment that might be very difficult to navigate for individuals in that space. So coming back to the research that David and his team have done, we found that, for example, a lot of payments, a lot of people, God, no, I'm individualizing payments, sorry. A lot of people actually are perceiving mobile payments as mobile payments because, of course, they don't understand what's the back office wiring. Most mobile payments today, I would argue, are card payments because you have your Apple Wallet, and what's in the Apple Wallet, it's a virtual or digital card. And it's just the alternative to the plastic that you would use in the shop. So having that sort of level of barrier to overcome in terms of the intrinsic understanding is already a big challenge. And you would argue that maybe consumers don't need to understand the underlying intricacies of how something works. But equally, you want to make sure that we are able to open up the digital payment ecosystem to innovation and introduce new forms. And therefore, there must be a level of protection, a level of incentive, a level of cost optimization that also comes back to the consumer so that choices can actually be made in that space. Having read in the research that 41% of users do not intend to increase digital use, what was a bit of a shocker, because that sounds a bit like even if they would be very clear around the additional benefits they would gain, they might not even go down the route at all because they're quite happy with the way they operate in terms of physical cash and potentially the limited digital payment use that they have today. In terms of the mechanisms that work for consumers for a long time and their understanding, the new ways of making payments could have different levels of protection. We called out faster payments, which again, faster payments has a protection around the transaction level, which is clearly defined, but you cannot assume that you get a purchase protection with it because you're not in a credit card system. buy now, pay later is clearly something that has become one of the trends, and not every firm is I guess, ethically transparent and driven enough to ensure that buy now, pay later does not end up in a consumer debt spiral. There are companies out there like Zilch, which are regulated, which are using AI to actually help the users with affordability checks so that people cannot go into the buy now, pay later if that were to indebt them even further. But I would say that maybe not everybody is working across that spectrum in terms of making sure that we are helping the users not to become indebted and not to create more economic stress on individuals and the economy. And then, as I said earlier, one bad experience, if something goes wrong, what often happens is that people pull out altogether. For example, direct debits, if you suddenly had irregular income or no income and you end up with a bounced direct debit, if that ends up in your account being closed, it's very, very hard to get your credit rating back to normal and open another account going forward. So it's about fraud, it's about consequences of existing instruments. And we need to be a lot more conscious of that to be able to address the question of how to improve existing instruments and how to innovate for the future. Let's go to the next slide. So the merchants, we've actually looked at small merchants in particular. You could argue that the big merchants, they have bargaining power. They can negotiate, for example, with the card schemes to get a good deal that they understand. But the reality is that card propositions can be quite complex. There are service levels, bundled fees, all sorts of elements. And to understand actually what it means to accept cards and also to be able to carry the cost of it is a practical challenge for small. Many small merchants, as a consequence, still prefer cash. But of course, they surcharge. If you're just paying £1 or £2, they would ask you to pay an additional fee, which I think is fair enough because it is expensive to accept cash. And equally, on the card side, if you are in this card situation, let's think about what could be a benefit to the merchant. Merchants would love to have real-time balances. They would love to have near real-time transactions. They don't want to wait for transactions to settle across 2 or 3 days. It creates issues with their cash flow. I mean, if you think about the pandemic, smaller merchants were often at the sort of edge of bankruptcy almost. So having cash in the bank is very, very important. Being able to reconcile it, having the right data, and also understanding your liability and cost is very, very important for smaller merchants. So there is an area where maybe open banking, if we could use it at a merchant, at a point of sale, could be an answer in terms of the speed of settlement, the digital effort, the data that they would be getting. And we need to go further down the route of thinking about how we can mobilize and enable that. Again, for smaller merchants, direct debits can be quite expensive, which would be potentially an alternative in some instances. And they've also been delays in rate of failed payments. So there is something around direct debits not necessarily being the answer for small merchants. So if you're faced with cards or cash, can't we think about actually leveraging the increasing open banking ecosystem to provide some more efficient answers for merchants that would equally be appealing to the individuals? And let's move to the next slide, please. Right, so coming back to cash, over the years, people very clearly understood what it means to handle cash, what it means to hoard it, how you use to budget when you work with cash. But the digital ecosystem is very different. What happens when your account is hacked? What happens if suddenly you have digital identity and digital payments and you have a digital identity hack on top of your account hack? There are challenges that could increase, and people need to work on solutions that help to mitigate those challenges, but equally to help consumer protection and communication so that we can slowly move into the digital together. And I would say from a general resilience point, I think no one argues with the fact that cash will have to be here potentially for a while, because there could be a complete outage of the digital ecosystem. What happens if you have a natural disaster and you rely on digital only? So there needs to be also consideration around backup. But when we talk about the digital instrument side, when I alluded to that briefly, Some people are very hesitant to go into this because suddenly if they don't have money in their account on the right day, they could get extra charges. They wouldn't know maybe how high these charges are. There's a whole complexity associated to different payment instrument usage with the different things they come with and the different consequences that makes consumers quite hesitant to go in to take that next step. So if we could come up with a simpler solution around paying from your account, having an element of variable recurring payments from a utility payment perspective, for example, to give back the control to the user, and also an understanding of how protection happens for the transactions when they pay from their account is in my view, the way forward in order to address the challenges and to allow people to embrace digital further. But on the other side, as we said, we also need to enable the acceptance side, which was very important and called out by John. We might not have acceptance of cash increasingly, that becomes a challenge, but how can we increase acceptance of account-to-account transactions in addition to cards? Because if the only option is cards, we may end up with a very difficult challenge on the business side in terms of cost and complexity. So let me summarize at the very end here. I think we really need to develop a more concrete milestone path to digital inclusion. As I started off, it needs to be holistic. So the payments world will do its job, the regulators will do their job, but there needs to be a broader inclusion piece in terms of the actual infrastructure that digital transactions run on, as well as the hardware and software. Some people today really struggle with digital skills to a point where payment apps don't work because they have too many photos on their mobile phone. There needs to be a concerted campaign to get everybody on a certain level of understanding combined with the simplicity of instrument. And I think that will also become very important as we look longer term to potential central bank digital currencies or other forms of stable coins, because how can we get everybody on the same page if we have such differences in terms of the ability to engage with the digital? I think more concretely, what we're looking at, certainly in the PSR context and the UK economy, is leveraging variable recurring payments broader and allowing more broader ability for account-to-account transactions, including at the merchants, at the payment terminal. How do we get to that point? Potentially simplifying elements of direct debit, including the sign-up, and also the sort of cost question around that. Digital identity is something the market will need to really look at developing, potentially an open banking API-based model that is linked to bank assured identity could be an early answer, but I think there needs to be a broader debate of how digital identity is designed and make sure that there's sufficient privacy and control by the individual. And of course, the clarity around consumer protection and transparency is very, very important so that people understand that they can safely move into digital and also broaden their choice within the digital payment ecosystem. And on the merchant side, we talked about cards a bit. The PSR has done a cards acquiring review. There will be remedies issued this year. There will be changes to hopefully make things simpler for merchants in terms of understanding the proposition, being able to compare them, but also being able to switch to non-card digital payment options. And of course, for the banks, continue to improve the APIs, add more API layers to allow, for example, for a digital API around the identity piece, and think about broadening the ecosystem really from open payments to open banking and open finance. And I think that's the journey we're on, but we have to start taking concrete steps across the board. Thank you very much.
Thank you very much, Ruth. You've sparked debate in the chat on protections and all sorts. And we'll come back to some of those issues at the end. Call a favor for the audience. If you could send a specific question through the Q&A function, it'd be a lot easier to pull that apart from the very interesting and educational debate that's going on in the chat there. Ruth, very quickly, can I ask you a question about the review that you're leading at the PSR? When will we see that? And can you give us any snippets for the lucky few that have joined us today?
Yes. So we really started off with the first phase of doing a short report that is done by the PSR panel. So it's the expert panel that's advising the PSR. really around what can we do practically to address the digital payment inclusion, as I said, across the parameters of getting more people from cash into digital, but also to allow for more choice within the digital payment ecosystem. We are expecting to publish this fairly short report in March. There may be more actions. I think John also mentioned it would be probably a useful idea to do an industry-wide, more independent review on digital payments. So maybe that's something that that could be done in the future. And I did sort of give you some snippets around, you know, identifying the open banking barriers at payment terminal, thinking about how we can solve this, thinking about how we can increase the transparency across the digital payment instruments, thinking about maybe modernizing elements of direct debit, and of course the follow-up actions to the card acquiring review will be important. There are also a few technical points around OBIE and what could be done to increase sort of the transparency to the user in terms of their real-time balances and what they see. And of course, promoting variable recurring payments beyond the sweeping use cases, which is the case today.
Smashing, thank you very much. Wonderful. Note to everybody, all of the slides will be circulated after the call, and we're also recording. I probably should have said that at the very beginning. So you will get a recording of this session, plus the presentations and some extra information that you have to wait to see. Thanks, Ruth. So we've had the scene set very nicely around what's happening with cash and what could happen in the future with digital inclusion. Now we're going to look at two specific elements of that, CBDC and digital identity. And first, I'd like to invite Natasha to take the stage and provide some insights into a central bank digital currency and digital inclusion. Natasha, over to you.
That's very kind, David. Thank you. Gosh, insight. I think I was asked to talk about the possibilities and challenges presented by CBDC. I think the easiest answer to that is that I don't know, because that depends on the CBDC, which will be built, which we don't have, which will be built for a future that we're not yet in. Perhaps it's just me and Mr. Rumsfeld that struggle with unknown unknowns, but fortunately there's people out there who don't, like central bankers. And I'm sure most of the people on this call will have read the Bank of England's papers, which set out explicitly well the possibilities and challenges of CBDCs. So I could just read from one of their papers, but as you've all read them, I won't, and as I can't improve on them, I won't try to. So I'll just focus on the inclusion aspect, as it's the theme of the day. One of the things that I think we know, and certainly from all the CBDC reading that I've done, is that all the thinking does think about inclusion. And quite rightly, because the common discussion is one about money and payments as a public good. Now, what I think a CBDC could, depending on its design, do a lot to improve inclusion, I'm far from convinced that a CBDC would be a slam dunk for ensuring it. Now, that said, I do think a CBDC discussion, or possibly an eventual CBDC instrument or framework, but the discussion is absolutely necessary to help with inclusion. And I've chosen now to say with rather than drive inclusion, quite deliberately. And I've done that for two reasons. Firstly, it's because when we're deciding on whether and how to architect a CBDC, we have to think about whether it, not only whether it can drive inclusion today, but whether it can help prevent exclusion tomorrow. We don't know what tomorrow looks like, but we know it's going to look more digital. And a CBDC design would want to take into account whether that digital future might, for different reasons, drive potential exclusion. The second reason I said with rather than drive is that we have to remember that exclusion can be a result of circumstance or choice. And circumstance may be addressable by public policy choices, by design choices in the CBDC, whether it's cost, accessibility, education, and so forth. But choice is different. Choice depends on subscription and trust. We have to have a CBDC or CBDC framework that we all subscribe to. And right there, I think there's the biggest challenge facing CBDC, public subscription and public discussion. Because for all the papers and proposals, the speeches and seminars, I'm far from convinced there's been sufficient public discussion and prioritization of the identified challenges and opportunities. And that I wouldn't lay the blame for that at the doors of the bank or HM Treasury. But I do think that public discussion is absolutely vital if we're to create a future that incorporates everyone's interests. Now, CBDC events and events like these, they might be well-attended money spinners and the must-have for everyone in the financial services industry, but reach is happening. And to put that in numbers, I had a quick Google this morning. The Sun has used the term CBDC twice in the last 2 years, the Daily Mail 6 times. And now, it may not be advisable for anyone to go to get their financial information from either of those two outlets, but the fact of the matter is they are the two most widely read papers in the United Kingdom. So I think for CBDC to be successful and inclusive, wider society really needs to engage on its architecture and the decisions around it, because as people like Ravi Menon has said, the future of money is far too important to be left entirely to central bankers. And I agree with Menon, not because I don't trust the bank or its peers, but because the future of money as we're thinking about it now isn't just a question of value. Is my digital pound worth the same as my paper pound? And yes, I'm old enough to remember the paper pound. But it's also much wider societal values. And it's only by us having those wider discussions that we can hope to get subscription and to maintain subscription over time. And to ensure that whatever happens next doesn't worsen the exclusion problem. So in short, irrespective of whether or not we have a retail CBDC or whether we have a digital money framework, which perhaps could deliver many of the same outcomes, I think that the public discussion that isn't happening but that needs to happen presents both the biggest challenge and the biggest opportunity. The biggest challenge because public engagement seems to be really, really hard. But possibility, because if we do it well, we can really architect something that really does help to drive inclusion, not just in the immediate tomorrow, but over time. So I've successfully not answered your question. I've not given you any more insights into CBDC than you had before I started talking. But I shall finish there. Thank you.
Well, you've sparked off an interesting avenue for conversation. So the Bank of England, which I believe you're a part of, and I think Ruth's part of as well, they have a public engagement or an engagement forum. But I suppose your point is that the public engagement needs to go much further and much deeper in order for it to be truly inclusive. How do you try and do that? Because it's that big challenge of how do you successfully bring in public views into what is ultimately potentially a humongous infrastructure project?
It's varied with great difficulty. One thing I do wonder is whether we can learn from other countries where engagement tends to be higher. Particularly, I think if we look at Germany is percentage-wise much more engaged with the issue. And why is that? There's much more newspaper reporting on CBDC in other countries outside the financial press. There's much more media discussion. I regularly listen to Italian, Spanish, and French news, and it is much more of a topic of conversation. So how you change the UK media? Well, I'm sure the bank has thought long and hard about that, and Treasury, and failed to come up with any solutions to it. Of course, there's nothing like a crisis, something going wrong, to trigger public engagement. And of course, the public tend to engage with payments and money, either when there's a huge problem with either of them. So countries with unstable currencies are very engaged with the question of CBDC. I don't think we want to go down that route. But I do think it's something the industry needs to try and get beyond itself. I think talking in small circles is not helpful. I think the engagement forum that the Bank of England has put together is good, but it's only a small start. So I'm afraid I don't have an answer, but I think we should look to other countries and see what they're doing differently, because they are more engaged, I believe, than we are.
I'm going to ask you another question that I don't think I have an answer for, but I will ask it in some way to the other panelists as well. It's something that's been brought up a couple of times in the conversation, and it's kind of a big question. But what do we mean by inclusion? Are we, you know, because this is it 100%? Sorry, I'm not loud enough. Is it 100% inclusion, or are we? What's the target here? Because surely 100% is unrealistic. What should we be aiming for with digital inclusion?
Well, I don't know that one shouldn't aim for the best. I don't know that one shouldn't try and aim for as much digital inclusion as possible, and because one would need to examine all the reasons that people are not digitally included, and try to address them one by one. If the end result is 100% inclusion, then there might be some areas to improve on. But as I said earlier, there may always be those that choose not to. I think the problem would come if more people chose not to be digitally inclusive as included as we go along. And I think that reading through much of the CBDC output that I see a lot of it looking to that question: will people choose not to transact digitally in the future because of fears of X, Y, and Z? And what frameworks can we put in place to ensure that they do subscribe to digital payments in the future? I can't hear you, David.
Can you hear me now? There we go. I've switched mics. I think that should be a bit better. Okay, final question for you, Natasha. What do you think the UK, and you won't be held to this, we'll agree on that, and I'll speak for everyone on the call, panelists and attendees included. Do you think that we will, give me a percentage on the possibility of us having a retail CBDC in the UK in the future?
I think we will have a retail something. I'm not giving you a percentage on whether that's a framework or an instrument.
You're very good, Natasha. Very good. That's wonderful. Thank you very much. We'll leave it there on this specific CBDC section, but I'm sure we'll come back to it later on in the questions. And do everyone please keep your questions coming through. We'll move on now to digital identity, which is a very important element of digital inclusion, something that we've touched on in the previous presentations. Sarah, I will come to you, and shall we start by playing a video? Is that correct?
That's right. Thank you, David, and hello, everyone. This is a video that was commissioned by some research that Women and Identity have done, completed at the end of last year. Women and Identity are an international organisation committed to diversity and inclusion in ID systems, which are at the heart of financial services, some financial services systems. The video is one of 20 stories of individuals in two types of market: emerging economy and a more developed economy. And this is Terry in the UK. So hopefully you'll be able to hear this. I'm going to share my screen now.
My name's Terry Evans. I'm 59 years of age. I originate from Wales. I've lived in Barton Hill now for just under 2 years. Worked mostly up and down the country as well, on the roadways, doing crash barriers and whatever. That's when I used to have a real life then. Yeah, I took a couple of years lie down with Her Majesty. So they went, basically then, I can't get credit, basically. Can't even build up a credit score. So I don't have any birth certificates or driving license or anything to, the only thing I have is utility bill, and that's not going to get me anyway. So that's what I rely on mostly. I just got a community care type banking thing, because I can't even get an Halifax account. Trying to open a bank account. That's the major one, and anything thereafter. So everything really it comes down to, if you don't have the proper ID, you can't. If you don't have the financial means to get what you need, then you just can't get it, can you? And for the fact that it's a simple piece of paper saying who you are, and they know who you are by your national insurance number, so they know only you that know that number, and yet they still want that extra tiny piece of information which you just don't have. Yeah, it gets annoying. It's your right, really. If you know your national insurance number, then everything else should fall into place. Your driving license, that's 180. Or the passport, I think, is 80, 85. Something like that. Which is something I just don't simply have, so I can't get it. So I'm muddling through at the moment, but it's getting to the point now where I'd like something else. You know what I mean? I'd like to get something like that. I just don't have the, because the bank I use, it's credit union, we just don't, it's not a bank. They charge me 99 pence every time I use it, the card, which is another, it's an atrocity. I try not to think of it. If I did, I'd go crazy. To be honest with you. You just have to accept your lot, really, haven't you? And just work around it as much as you can. It's just annoying when you want something so simple and you can't get it. You just get round things, you know what I mean? You just, if you haven't got it, you can't have it, can you? Which is wrong. But it's just so simply just for ask for your possessions. Just going back, you know, my old bureaucracy where it costs so much money just for putting it in an envelope.
David, if you'd like to share the slides.
Yes.
So that was Terry. Terry is one of 5.9 million people in the UK who is ID challenged. And we asked a number of people who are ID excluded, but we also asked a number of experts in interviews. And you saw the quotation there from Cheryl Stevens, who works in identity at the DWP. And we wanted to understand the current state of digital identity in respective markets, and also the different approaches that are being taken to drive greater inclusion. And it was mentioned earlier, the analog switchover program, which I sat on the board for, and I was representing those people who wouldn't be able to have access to TV. It was a very well resourced program of work, and at the moment there isn't a cross-government national piece of work that is to that extent. But we are more and more in an international global ecosystem. And so what Women in Identity have identified is that what is needed is an international ID code of conduct, a set of principles, guiding principles that will point to an approach that will enable people who are creating teams, product teams who are creating ID systems, which are at the core of a number of different services, including financial services, to enable people like Terry to have access. Next slide, please. So as I said, Terry's one of 5.9 million people in the UK who are ID challenged. Last year, I was commissioned by the Open Identity Exchange to conduct a piece of research in collaboration with Experian, using Experian's Mosaic 7 datasets, to do something that hadn't previously been done. I've been working with this group for 25 years now, the ID excluded in the UK, we were looking to understand the scale of the problem to some level of confidence that we haven't achieved previously. Next slide, please. So what we did was we segmented the UK population who cannot verify their identity through traditional means. And we mentioned their breeder documents in the UK, such as the driving licence and the passport, and also lack of financial data history. So that was the situation that Terry's found himself in. And our hypothesis was that to access to identity services would be improved by introducing new data sets into the ecosystem and leveraging alternative ID proofing techniques. This was found to be positive in theory. And there are a number of data sets and alternative ID proofing techniques that people like Terry would be able to access if they were made available to him. Next slide, please. The way we did it, so I think it was mentioned earlier, this Venn diagram between social, digital, and financial exclusion. We looked first to filter UK households that were ranked with a high propensity to have neither a driving licence or a passport. Secondly, we looked at the key drivers to identify and to segment the ID challenge universe. So we looked at age, digital literacy, and financial resilience. And thirdly, we looked at the features and the key indicators or variables to identify and quantify how many people in each ID challenge segment might have an alternative ID proof or be in an alternative data set. So for example, the percentage of households who have DWP benefits. Next slide, please. So the segments that we arrived at that are most likely to be ID challenged were these 5 key segments. There were those people who were rural, segment 1 and 2 were mostly rural. And then segments 3, 4, and 5 tended to be urban. A surprise to a number of people, not myself because I'm a Londoner, was that the vast majority of people in the UK who are ID challenged live in London. A lot of Londoners don't have a passport, they don't have a driving license. It's kind of a liability to have a car in London. And so we had thought, or some people had thought, that it would be mostly rural. There are a lot of people who are in rural parts of the country, a lot of people in segment 3 who are in the northeast, in Scotland, in other urban communities, other urban towns, but the vast majority are in London. The total 18 plus is 5.9 million. If we include 16-year-olds, this is over 6 million, well over 6.5 million. And I did some separate ONS data analysis to look at the 16 to 18-year-old group. That's not included here, but we are looking at well over 12% of the UK population. Next slide, please. So the report conclusions were that the following data sets are candidates to help support people like Terry. The online banking data set, the NHS patient number, he mentioned the national insurance number data set, council tax bill, the learning record service, which is owned by the Department for Education. There's a number of others. Clearly, there's an enormous risk involved in using the NHS patient number because there's so many vulnerable people in this, and it would probably be deemed not a good idea. But the piece of work was looking to identify who's where. So that's where we got to. The committee will decide which data sets they take forward. I very much doubt it will be the NHS one. The analysis also identified that there were several ID proofing techniques with the potential to help people like Terry. So account log on in a controlled environment, digital verifiable credentials issued by an authoritative source, i.e. the Department of Health or another government body, for example, with a digital signed certificate accompanying it. API validation against an authoritative source, this has already been done, and richer data sharing APIs. Next slide, please. So what we found in the OIX report echoes the findings from the initial phase of the women and identity research, the human impact of ID exclusion in financial services sector. And the key 5 principles that we feel will be foundational to the creation of an international ID code of conduct are that the user is at the center of the ID ecosystem, and that one size does not fit all. We need different processes and customer journeys to reflect different people and their different circumstances. We need to move towards proportionality, vouching, tiered KYC and eKYC, drawing on other government data sets, which echoes the OIX findings, to reduce the burden of identity for the user. And 4, identification may be individual, but we live in networks of people that already know us. So there is the potential to leverage that. And 5, it's essential to build diversity into ID or ID-based design and development teams to ensure that we're designing for the broadest range of users. Next slide, please. So there is a need for an international ID code of conduct. A number of governments and regulators that we've spoken to are balking at the idea of legislation. It's expensive, it takes time. If there were an ID code of conduct that private sector trust frameworks, and we mentioned open banking. I've recently been leading the open finance team in the UK. So the trust frameworks that are core to these types of initiatives could incorporate an ID code of conduct that is signed up to. So we've completed the first part, the first phase, looking at the human impact of ID exclusion in different types of territories. Next, we will conduct a piece of economic impact of exclusion, a report that will highly likely be taken forward by some renowned business schools in collaboration. We'll develop a code of conduct, a set of guiding principles, probably 5 to 10, and then we'll develop an implementation framework, which will be an fictional ID system and some case studies conducted by our sponsors, offering a practical guide to implement the ID code of conduct principles at each stage of the product design. This will be taken forward this year, and then we will have a type mark, trust mark of some sort that will be part of the conformance, which will be taken forward in 2023, once we've completed this work. This work is sponsored, so I know, David, that you're going to share some links afterwards, but if anyone is interested in supporting, getting involved, sponsoring the work, then you will have some information about this. And thank you very much. And if anyone's got any questions, I'm very happy to answer them.
Thank you very much, Sarah. That was a great presentation. And yeah, we will send around information on the work that you've been doing. And if anyone wants to get in touch with that, we'll also send around the video as well. I've got a question for you, which is, if you had a meeting with the Prime Minister or the Chancellor, whoever, and you had a meeting with head of all the regulators, what would be your ask for them with regards to making sure that we can solve this digital identity issue?
Cough up some money, because it's expensive. It's not a cheap thing to, this is a difficult problem to solve. And it takes organization, it takes teams of experts, and it takes the collaboration of ecosystems. So I would say take this very, very seriously, because we are moving into, as John mentioned, and all the presenters have mentioned, a more cashless society, whether we like it or not. Terry's example, Terry, it wasn't part of the video, but within the interview, he's basically mostly reliant on cash. And if we're moving into that world, which we are, we're going to have a greater divide unless this is addressed. So I would say take this seriously and put your money where your mouth is.
Very good points. Quite a specific question for you now, but I'll ask it anyway. Joint Money Laundering Steering Group already allows diversity of documents, but at the grassroots level, for example, bank staff, they're not trained to accept alternatives. How do you ensure that a new ID code of conduct is adopted and followed by the providers of the services people need?
So the approach would be to approach, so for example, in the UK, the CM9 banks, we're talking to some of those. So within a bank, if a bank adopts the ID code of conduct, then it would be core to the way their ID systems are being created. And I can't really envisage a world, certainly not in the short term, where assisted digital is not required. Now, at the moment, the banks pay the post office to deliver that type of service in the UK. So I think that, I'm not sure if I'm quite answering your question, but the ID code of conduct would be embedded within trust frameworks, within regulation, ideally, and within the banking sector, within the identity product design teams, so that the products are, as much as they can be, inclusive, but there will still be a proportion of people who are not going to be able to, or choose not to go digital, and those people would need to be assisted, i.e. an agent performing the transaction on their behalf in a digital fashion.
Yeah, in your presentation, you mentioned how you were surprised to see London have these high levels of digital, lack of digital identity. London is a fascinating example to figure out what's happening, because you have both sides of this of the extreme in London, and they can probably live within kind of throwing distance between each other. And I know that from looking at cash use, for example, very, very high in London, because you have a lot of people who would fit in the demographic that would be using cash quite a lot in London. Wonderful. Thanks very much, Sarah. We've got plenty of time left, so we're going to just have a chat with the panelists. Please do send through your questions. If you have a burning one, send it through again on the Q&A, because there's lots of stuff to scroll through with chat, and the questions aren't particularly clear. So please do keep sending them through. I'll go back to you, John, because you've been silent for a long time. John, I've got two questions for you. The first one is that came through, which is about, are there innovations around the cash distribution space that can support the community distribution, the circulation of cash, that can start to make that a bit cheaper?
Yes, there are, and I think cash will be fine through a mix of supporting the current and those kinds of innovations. For example, a Select type app, which allows you to go and take money out of retailers' tills, which was piloted in the cash access pilots. I think the One Banks is an alternative example to the post office. Lots of things there, but it would be a fatal mistake to assume that that is going to keep things going forever. We're not changing to digital because of some government or industry desire. This is consumers voting with their feet, changing the way that they pay. I see no reason why that is going to change. And if we don't use the next 5 years to fix digital, what we will end up with is a society where we've got a minority who are forced to use cash. Cash will be like checks. Look at checks. Imagine living your life off your checkbook. It would not be a happy experience. And I see David Birch has asked a couple of times, what's the target? Is it 90%? Is it 100%? Well, of course it's 100%. You can't have a society which aspires to allowing a number of Terrys. We might be able to cope with a number of Terrys, and 1.5 million feels like as far as we want to go. But if you end up with 5 million citizens in the UK who are obliged to live a second-class existence because we didn't fix digital while we had time, then we will start having some unpleasant characteristics like third world countries rather than the first world country we are. So we need to get on with it and not assume that cash can just be preserved and used as the way we deal with payments for the next 10, 15 years, any more than it would have been wise to do the same with checks 20 years ago.
That brings me on to our next question for you, John, which I'll then ask to the other panelists, which is, it's a question that's been asked by Tony Herbert, who says there seems to be, through the discussions today, support for some sort of access to digital payments review as a first step on the road to dealing with a lot of the issues we've talked about. How do we do, to powerful people on the panel, how do we do this? Is there a call for people on the listening and taking part in the session to do something as well?
Who are you asking, David? Is that me?
I'll ask you first, John.
Clearly, we've had the experience of the excellent Natalie Sini access to cash review, which really moved things forward. There's no shortage of solutions for this. I mean, I've heard on this call things ranging from Sarah's suggestion, maybe it's something like the post office, through to, well, if only we could roll out CBDCs more quickly in the digital, who knows? But we've got to choose, and we need a forum which has got government backing to reach that decision, and we've got a couple of years, so we need to start now.
Okay, Ruth, I'll come to you next. How do we get this review off the ground?
Well, I think most importantly, it has to be really an independent review, because there will be loads of elements that the industry will have to deliver. But as John said, it has to have observer status of the government. It needs buy-in that, first of all, it needs to be done. Because it was very clear several years ago that access to cash review had to be done. And it would be good to see that everybody agrees that this type of review needs to be done, because we are a little bit running against time. And I think that came out quite clearly through the different presentations. And I like the fact that we are now connecting all the dots and including digital identity as well as the cash digital payment thing. And of course, as Natasha called out, addressing the reasons why people don't want to step into digital because of their choice. As the net kind of closes further, people will be forced to, but I think we would want to create an environment where people voluntarily step into the digital for the right reasons and understand how to engage with it. So it needs to be a very holistic review. It needs to be independent, and it needs to have buy-in from everybody, because it will not only be the industry in terms of banks and payment providers that will resolve it, or the cash systems or the payment systems. It will need to go beyond that in terms of the broader infrastructure and access as well.
Do you think that there's a lot we can learn from the COVID lockdown period that we've just been in with regards to people's payments behavior and what makes them move over? It was a comment from Daniel, who said he was quite surprised to see that cash hadn't dropped as far down as he expected it to, because of the lockdown and the discussions around whether cash was hygienic. Is this a good opportunity to try and learn some lessons from how people reacted in this crisis with regards to how people may adopt payments in the future?
Yeah, I think it does deliver us input for scenario planning. I don't think we've seen the whole breadth of it yet. I mean, my point, I guess, on resilience is an important one to take into account as well as you look to create a more 100% digital environment. How do you create the resilience? There may be scenarios given natural disasters where things will have to be able to work offline as well. So I think there are quite a few elements that will find their way into technical designs as much as anything else. But I think having all the different factors at the table together is important as a starting position. And with the work we've done in the PSR, we looked very specifically around payments, competition, innovation, infrastructure. This is one piece of the puzzle, but having a holistic review, in my view, would get everything on the table and therefore address it and interlink the elements in terms of the solution.
Natasha, I'll come to you next. What would, if there was to be a review of some description to address this, what would you like to see happen there?
Well, I think I agree with everything the other two panelists have said, and it sounds like the answer is Natalie Keeney, which is, I think, kind of what they didn't say, but what they meant. I think let's not have it led by the financial sector, and because the financial sector already knows what it knows. We need to hear from the rest of the world what the problem is and why there's holdbacks. What the deterrents are. So I think it would be a very big cross-societal job to do, and I couldn't imagine anyone better placed to do it. But it shouldn't be led by the financial sector in any shape or form, because I think that will be alienating by itself. It needs to be a much more of a kind of societal effort. I think to the point on the change during COVID, and a lot of the people on this call are probably early adopters of things and sort of move straight into them. But a lot of people, only started using debit cards when their bank, are pushed into things later, and they're not making positive payment choices. And it's only really payment nerds and tech geeks that make positive payment choices. Most normal people just kind of go, oh shit, do I need to pay by check now? Okay, I'll pay by check. And they're sort of forced into it. And they're not really a problem. I don't think it's the people that can't get there or won't get there for whatever reason because of mistrust, and that's what or mistrust or inability to access, lack of ID, all those problems, which that piece of work that we've been discussing needs to address very urgently, because the problem is getting worse, and the non-digital premium is so big that it needs to happen fast.
Yeah, absolutely. And I think Natalie had to leave the call halfway through, but she'll see a recording, so I'm sure she'll be very happy to hear that she's got a new bit of work to get on with. But it was very successful. It really did bring it onto the political agenda, and it was kind of, cash was kind of swimming without any direction, and no one was taking ownership of it. And the review really brought that forward. But as Phil, who was part of the Access to Cash review, says, one of the reasons why it was so successful and so good was that it was independent and it had a good mix of people on the panel, which, like I said, Natasha, will be important for it not to be industry-led, because industry may not perhaps understand in too much detail the issues that you just raised about adoption. Sarah, if I could come to you now, you're welcome to add any comments to this discussion, but I'd also like to ask, with regards to digital ID and the code of conduct, are there any countries that are doing a lot better than we are in the UK that we can learn a lot from?
There are, for sure. I think that it's there are things that one can learn in principle, but different countries have very different socio-economic and cultural environments. And so, for example, a lot of people point to India and their recent identity system, which has been hugely successful. But the way that India has done identity, firstly, they have pretty much a clean slate, which in the UK we don't have. And secondly, they have a very different cultural environment. So people, for example, they need to put food in their bellies. They have a lot of labourers who move around from town to town and are unbanked. And the only way that they could receive payments is by signing up to a digital ID. There's a different impetus and motivation for them to do so. It's really fundamental. It's the difference between feeding your family and not feeding your family. And we, on the whole, don't have that situation in the UK. We have a welfare system, and they don't in India. So I think that's just one example, but I think we need to be careful when we are comparing different ID systems in different countries, because we have very different environments. Another example is the ID system in China or Estonia, for example. They have a very have a government-owned system, and they're able to make decisions on behalf of their citizens that that just wouldn't be deemed appropriate in the UK. So there are lessons we can learn for sure, though, and they're wide and varied. I think a lot of the lessons come in the form of consent and the way that we're managing data. As been mentioned in the chat, I noticed around privacy and security and increasing trust with consumers. There's definitely part of this. So we definitely can learn from the way that other countries have managed consent and trust. But I think we do need to be careful when comparing different socio-economic and cultural environments when it comes to identity.
Absolutely. not every country is the same. That I'm sure John had experience of when you were doing the preliminary exploration on the access to cash review. Everyone's moving at different paces. Something that's interesting, John, I remember the private discussion we had, and I think you said this publicly, when you went to see Sweden as a whole, they said to you, oh, we wish we were looking at this with the time frame that you are, so you have enough time to address the problem. I wonder, two questions. One, do you think that the UK acted fast enough to address the access to cash issue? And two, do you think that we are maybe a bit behind on dealing with digital inclusion, or is there still enough time?
I think with cash, we've been just in time. So at the moment we have good cash infrastructure in the UK. You can see it in the press. ATM numbers and branch numbers are declining at pace. But fortunately, we've got some really good systems, some of them only agreed 3 weeks ago, to make sure we maintain that system together with a willing group of large retail banks willing to pay for it. As I say, the problem is we've got to get digital up to speed before that no longer works. And I'd give it about 5 years, but these are difficult, complicated things to implement. I actually think things will move faster in the digital space than some have said. I mean, Natasha talked about the work going on with regulators like the Bank of England. I mean, I've never assumed that the Bank of England is going to be launching the UK's digital payment systems. I'm assuming that's going to come from an international card scheme or fintech or something like that. What we've got is regulators ready to regulate. What I don't see is enough focus on inclusion. So I'm pretty certain I'll have a really good digital currency, which I'll be able to make free transfers to currencies overseas and have programmable money to do exciting. I think that's all going to be in my wallet, probably within a couple of years. What I worry about is it's not going to be in the hands of everybody, and that's where the risk is. We've got to get on with working out a solution which is inclusive for all, and it will take that 5 years. So with it in cash, not with it in digital inclusion, is my view.
Just to answer someone's question there, I think Bjorn from ABBA did have a hand. It is a cash campaigner, but I don't think he is individually responsible for Sweden still using cash. But I'm sure he's had some influence being a cultural icon. Ruth, if I could ask you, are you aware of any countries that are doing a lot better than we're doing with regards to improving digital payments? And also, if you have the floor to industry, what's your big ask for them to try and get us closer to digital inclusion?
Certainly there are countries out there that for whatever geopolitical reasons are quite good at digital payments. I don't think I need to say any more on that. Smaller countries that are developed countries will also find it naturally easier, because if they have a social system, a care system, and the significant sort of amounts of government funding, then it's very easy to include people digitally, and it really depends on the culture of those countries as well. So there are examples out there, but it's certainly not the majority. And I think what we need to make sure is that our values and ambitions as a country are truly translated into this, which really comes back to the inclusion. It comes back to discussions happening at government level in terms of leveling up and making sure that everybody gets fair access and a chance. And I think that's really what we need to work for. Clearly for the industry, it's often hard to create business cases around inclusion because they don't financially pay. But people don't realize the sort of ultimate positive impact of having everybody in the economy, which ultimately does pay. So I think we need to be a lot more mindful and longer term thinking, because the risk is if we continue to exclude people in identity, in payments, in financial access, in digital access, we will create more problems in terms of our societal fabric. And that is really not only a moral issue, it's also then a real friction issue, an economic issue, and beyond. And I'm not even going to paint that picture. So I think we're at a point in time where we need to address it, and the industry will have to play its role. I agree to the comment that if it's industry-led, it might seem to be a bit tainted. The question is who would fund an industry, let's say, who would fund in a UK-wide survey and really initiative at that level, which needs to be that holistic, and who would ever be funding it. And it could be contributions from different pockets. That would probably be the ideal scenario. But in my view, it has to be really truly independent to hold everybody accountable at the end of the day in terms of the outputs, and certainly something I'd be delighted to help on.
Coming towards the end of the event, so I'm going to, in a moment, ask the panelists if they've got any kind of closing comments I'd like to make. But Sarah, I'm just trying to, I've got a question about reviews, and Natasha's on the CBDC Engagement Forum, Ruth's doing her review, and John was, independently involved with the Access to Cash review. So you're the only independent person I'm going to ask this question to. Why is it not a sign of failure that we keep having to have reviews to try and address these issues? And is there some way you can think of, I'm putting you on the spot here, is there some way you can think of that means that we can, eventually be ahead of these big changes that are happening?
Thanks, David. I actually decided to bite my tongue for a change on the review point, the thing is you've asked a direct question. Yes, I think reviews are very useful because they give one a strategic focus. What's the problem? And sometimes some ideas of how one might address that. But what they don't do is do it very much. So what I'm all for is an ecosystem-wide, collective private public sector group of organisations that come together, that represent the ecosystem, perhaps are strategically focused by a review that's done in sharp fashion, because we do need to get a move on. This work has been actually going on for over 25 years. And a task force, perhaps similar to the type of group that was put together and mentioned earlier, the analog switchover programme. There was UK Online, there was Go On UK, Martha Lane Fox led up, and an ecosystem-wide group that takes forward action and has a reasonable budget. And that could be pooled funds from the ecosystem, private public sector pooled funds. It's happened before, so it could happen again.
Smashing, thanks, Sarah. Okay, well, I'm going to go around and ask everyone for some closing comments before we end the session. Natasha, I'll come to you first.
Gosh, that puts me on the spot. Well, I'm going to pick up from a point that David raised in the chat, which is that this is, and also something that Ruth said, the problem we've got to remember is one about payments, and exclusion from payments means starvation or stealing. It's as simple as that. That is how the picture eventually looks. So everyone in society needs to contribute to it. It's not about banking. I think identity is a huge problem. I don't think a mandatory ID framework would work. I've lived in countries that have mandatory ID frameworks, and you just have people that are ineligible for the mandated ID system. But I think we need to address it. And the final point I'd make is, let's stop looking to the banks, the big banks, for the solutions, because there's a lot of people in the industry who can contribute to the solutions, and banks are not necessarily the only ones that should do. They shouldn't be the only ones to fund the solutions, and they shouldn't be the only ones to contribute to them.
Thanks, Natasha. John, any closing remarks from yourself?
Yeah, don't waste time. This isn't going to wait for us. People are moving to digital now. People are being excluded because they can't use cash now, and that journey will continue. It's going to just get more and more painful. So we need to get on with it on the digital side. I think good work has been done on the cash, but it'll only hold it together for 5 years or so.
Fabulous. Ruth?
Yeah, speed is of the essence. What else can I say? I think we know where we want to get to, but we really need to work across the whole spectrum, which will be a different approach to that taken so far in the industry in terms of how problems got resolved, how reviews got done. Completely agree with Sarah. A review would be the first step. It should be quite sharp and clear and done quite quickly, because it's much more about the implementation. But you need a review and everybody at the table to actually get that strategic outline. And I think that's where I see the value of us moving forward collectively. So let's get it done, but we need to coordinate pretty quickly.
And some final comments from you, Sarah?
To say that I agree entirely, Ruth. There are initiatives in flight currently. So I would encourage people who are interested to contact me or David about the Identity Code of Conduct, because you can get involved in that now. It's in flight, and it needs funding, and it also needs brains. So we'll have a series of roundtables, and people who are experts in the industry and financial services and in identity, we can do with your brains around the table. So in-kind contributions are very welcome too.
Fab, thank you very much. The government, the consultation closes today on the future regulatory framework for UK financial services. And its main big theme is making sure that the UK financial services are a world leader and globally competitive, and the UK scene in this light in the post-Brexit landscape. This, perhaps the UK could be a world leader in dealing with digital inclusion. That could fit nicely into the government's agenda. So we've already got our policy angle there. A great suggestion from Lucy on the chat, asking about bringing research together. It's always a difficult one. There's so much out there, but perhaps we can have some offline discussions about how we can start to maybe talk about this a little bit more regularly. Thank you very much to all of our panelists. That was a really fabulous discussion. I really, really, really appreciate the time you've taken to prepare and be part of today. Thank you very much to John and Graham at Link as well for supporting us with putting this session on. We will follow up with information from all of our panelists on their work and what they're doing. We've also got some research that Link's commissioning on how people are using cash and their attitudes to payments that's going out tomorrow. So it'll be quite very, very up-to-date research on attitudes towards payments, which you might find interesting. This has been recorded, so you'll get a recording of it. And thank you all very much for attending as well. And I hope you have a wonderful rest of your day. Thank you.
Thanks, David.
Thanks. Bye.